Hi, welcome back to Oak Business Consultant. Today we are back with a new Excel template that is for the utilization of funds for any business. This template is designed so that any business can use this for tracking its utilization of funds. In order to review this template, we are going to go through these 10 different tools. But before reviewing this model, you have to know that these P cells are representing the input cells and these gray cells are representing the linked cells. Starting off with the first sheet, assumptions. Here we have included all the major assumptions related to a business. Now these include your tax assumptions, sources of capital assumptions such as investment assumptions, grant assumptions, loan assumptions, capital expenditure assumptions, expenses, including payroll and revenue and cost assumptions. Our next sheet is revenue analysis. Here we have calculated the total revenue being generated from each product category for every year and for every month, and then at the end we have calculated a total revenue figure for each year and for each month. Similarly, we have calculated the cost of goods sold for each year and for each month. Please note that this is a 5-year projection model, so the total number of months in this year is 60. Next is our supporting details sheet. This is a kind of working sheet where we have calculated the major operating expenses of the business. These include the fixed and variable operating expenses. Then we have payroll schedule, depreciation schedule, loan amortization schedule, which includes the interest payments and the principal payments. And then at the end, we have working capital analysis, where we have included computations for accounts receivable, accounts payable, and closing inventory. Moving on to the next sheet, financial statements. Here we have included the three major financial statements of the business. These include your income statement, cash flow statement, and balance sheet. The income statement shows the financial performance of the business for each of these 5 years and then monthly as well. The cash flow statement shows the net cash increase or decrease for the business, and then we have balance sheet which shows the financial position of the business for each of the 5 years and for each of the 60 months. Next, we have the fund sources tracker. Here we have included the sources of capital and how they are arising in each of the months, and then a total figure as well for each year. So in this model, we have sources of capital, three basic sources of capital, that is equity, grants, and debt. And then we have total funds calculation at the end, and also a monthly funds allocation calculation at the end of the sheet. In the next tracker, this is regarding the budget allocation. Now here we have allocated a certain percentage of the total monthly funds to each of our budget categories. Now this is done on the priority basis. First of all, we have given priority to debt repayments. Once we have allocated a certain percentage of funds to the debt repayments, the remaining fund is being allocated to capital expenditure. And once we have allocated a certain percentage of funds to capital expenditure, the remaining funds are being used for operating expenses. Now here we have included department-wise distribution of operating expenses, and then we have allocated percentages accordingly to each department. Once we have allocated a certain amount of budget to each of the budget category, our next tracker shows us the expenditures and how they deviate from the budget. So in the first section of this tracker, we have included the expense categories and the actual expense being incurred in each category. So these are the actual debt repayments for each year. Then these are the capital expenditures incurred for each year, and then these are the actual expenses incurred for each department. Basically, the operating expenses incurred in each department for each year and for each month. Once we have calculated the actual expense, then we have calculated variance, that is budgeted minus actual. So we have subtracted the allocated budget from the actuals. Basically, we have subtracted the actual expense from the budgeted allocated expense to arrive at the variance, how our actual expense is deviating from the budgeted expense. Here you can see that light red cells represent that we don't have enough budget to cover this expense. Next is our accumulated variance. Here we have calculated how our surplus budget is adding up to the next month so that we can see where our actual variances are located for each of the budget categories. Next is fund utilization summary. Here we have compared the total funds and the total expenses being incurred in a single year. So we have compared the total funding and total expenses for each of the years 2023 to 2027. As you can see, we have included utilization of funds section, total assets and total liabilities section, and then total additional funding at the end. This negative total additional funding shows that we have excess funds to utilize in some other resources. Then second last, we have financial analysis tracker. Here we have included the major financial analysis computations for the business. Now this includes the break-even analysis where we have calculated the total break-even sales point at each year. And then we have financial ratios which basically include the major financial ratios of the business such as solvency, liquidity and profitability ratios. Then we have company valuation where we have calculated the NPV, IRR and the payback period for the company. We have also included the return on investment. Next and the last tracker in this sheet is sensitivity analysis, where we have included sensitivity analysis for both optimistic and pessimistic cases. And then we have calculated NPV and IRR on those bases. Our last sheet is the dashboard. This includes a graphical representation of all the financials we have calculated in our previous sheets. Some of these graphs are, for example, we have included the sources of capital and how they differentiate between different years. And then we have monthly funds allocation, and then we have fund utilization summary graph. Similarly, we have break-even profitability ratios and profitability in dollars, total assets versus total liabilities, and much more. Also, we have included a scorecard to represent the major financials of the business. That's it from today. Thank you so much for your time.